And welcome to another update video about XRP. Here on the XRP chart, we're still moving on the larger time frame in this larger range. We could still be working on a triangle pattern, even though it's of course possible that the price uses the entire room in this support area. It has a lot of room still to go lower if it needs to test $1.54, maybe $1.21. In just a larger wave 4 correction. These are the standard support levels relevant in such a correction. Especially the 38.2 retracement at $1.54 is an ideal target normally for a fourth wave. And yeah, that fourth wave might still be unfolding. It's I assume it's unfolding either as a triangle or we might go lower more directly. And I've added actually on the smaller time frame a roadmap that shows us how the price could get to 154, maybe even 120, even though it doesn't need to go there necessarily. So we'll take a look at that. We're still waiting to see a bit of action here on this chart. I mean, it's not doing much. It's been moving sideways and has been dancing on this $2.08 level for quite some time. This is, by the way, an important level on the larger time frame, $2.08. We're holding above it. And therefore, I don't think it's coincidence that the price has also shown here, you might see it, as a small reaction again to that level. It's shown a reaction to that level several times, even though when there's more volatility, of course, it goes lower first, but then shows a reaction. This is where the bulls turned up. This is where the bulls turned up. So is this enough for the bulls to turn up again and drive the price higher back into the middle of this possible triangle? We'll see. It's not, the bulls aren't there yet. So the local trend is still down, but we haven't really broken below any of those previous significant swing lows. So that's very important to understand. Okay, but the overall larger range is basically relevant as, you could say, bullish range as long as we're holding $1.20. So that still means there's a lot of risk of going lower, even in this scenario of a potentially still unfolding fourth wave. Now, this correction has taken now some time. Not really a surprise. I mean, I've been warning already like weeks ago about the potential that we could spend some time in this sideways range and that it could also be something interesting for range traders. I mean, should we really go a bit lower in that range? It provides a better reward to risk ratio. I mean, that's where it really would get interesting from a reward to risk point of view for potentially one more high. At the moment, this is simply a sideways consolidation pattern, up and down, indecision, not really anything nice going on, not really anything interesting going on, no volatility at all. So we'll see if this time something breaks. Last time we had an attempted breakout to the upside. That failed as well. That was early in March, and it ended as a three-wave move. And that turned this whole thing into a potential triangle. If we get an upside breakout, and we'll talk about those levels that are relevant on the smaller time frame, but for now I think the focus is on lower until we see a reaction to micro support. But should we at some point go higher, the $4.20 level would be the next resistance above all-time high territory or in all-time high territory. Then we've got the $5 level, very important level, not only psychological level, but also it's the 100% extension exactly at $5. Then we've got $5.65 and $6.60. These are standard Fibonacci extension levels. So I would say, let's just take a look at the smaller time frame because it gives us better clues about what's going on really on the micro. And on the smaller time frame, yep, we are tracking here also a potential triangle pattern. We're tracking here in white this wave 4 as a triangle, A wave, B wave, C wave, D wave, E wave, and then we could go up higher, right? That's the idea. But the problem is there are multiple ways how this could be interpreted. And I think we'll keep it as simple as possible. And I'll try to delete the structures we don't need anymore. Let's talk about the triangle first. The triangle itself is valid as long as the market holds above this last swing low from the 11th of March, 10th of March at around $1.89. That keeps the triangle valid. But keeping the triangle valid just means we have a little bit more sideways price action probably to do. Now, I did mention that it's entirely possible that the D wave element of the triangle is already done. And this is already the E wave down here right now. But then ideally it would hold above $2.01. So we'll see if there's a reaction in this region. I just showed you that on the larger time frame, there's an important Fibonacci level located around $2.08. and there's smaller degree support at around $2.01. So I'm watching if there is going to be a reaction here. So far, there's only a very, very small reaction, and we could see potentially a bit of a move to the upside from here. Next support, as I said, $2.01, and then the 189 level. Below that level, $1.77. Even if we break below $1.89, it would kind of invalidate the triangle structure as it is right now, but it would allow for a reset of, it would allow for the reset of the C wave of the triangle, because that could still be unfolding, but that drives then the focus towards that 176 level. Either way, until we get a 5-wave move up, there is no confirmation that a low is in. This is simply currently a pivot, an area to watch here around $2.01, $2.08. I can even remove those upper sections from that micro support area, try to keep the chart as clean as possible. But this is an area from where we are watching, ideally for a reversal to the upside and the start of the next move up. And that could be, yeah, that could be the either the D wave here in white, maybe already a direct breakout, but then we need a break above the $3.03 level. You see, this is quite a large range, really for an indication that the bulls are really making a comeback, not just on a local level, but that they really are serious about taking the price higher. Of course, the yellow count is possible as a direct breakout scenario. Don't need to repeat that. We talked about that. That just indicates the wave 4 already bottomed, but maybe I'll remove that completely from the chart because there hasn't been any impulsive move to the upside, really. It's technically valid as a diagonal, but speculative. What I find just much more interesting is the blue scenario, which of course comes into focus now that the price is in a local downtrend at least, but it would need to be confirmed further with a break below those levels that I just mentioned. And it could take the price down lower like that. We could say, hey, maybe we had an A wave down, a B wave up, and we're now moving down in this C wave, which could be an ending diagonal. Makes it very complex as well. Wave 1, wave 2. It just doesn't fit. This microstructure doesn't fully fit into the picture. But okay, let's see. We could go down in a third wave, then a fourth and a fifth towards 150 there, 120. But this scenario, in my view, it doesn't count that well. The proportions don't fully align, but that doesn't mean that the price couldn't go lower. It certainly can. It's just a matter of what is the most probable scenario. And I'm still at least watching support here. I'm not saying this is anything really that is easy to trade or really tradable right now. It is just a range for now, and maybe more rather something for range traders. Still, I mentioned the key levels that we can be watching, and I think this here down there, the area between 120 and 150, it will be interesting, certainly, not only for range traders, but for those who are maybe still waiting for a better entry. That's the update about XRP. Hope you liked the update. If you did, please hit the like button, leave a comment, and subscribe. And if you really like the content, then please check out the channel membership. Also, make sure that you follow us on Instagram and Twitter. You'll find the links in the description. Thank you very much. Bye-bye.